In today's video, we are going to backtest the exponential moving average price crossover on Bitcoin USDT on Binance. This is a long-only strategy that we are going to take a look at today. And here is, for example, a 200 moving average, an exponentially weighted moving average on the daily time frame, as you can see. And the strategy rule is very simple. We, for example, enter when the candlestick closes above the blue line. So, for example, here on April 29, 2020, we would have entered at about that price, as you can see here, 8,700. So when the daily candlestick closes above the line, we enter along. So I recommend you use the spot market to avoid the funding rate, because with that kind of strategy, the trade would have lasted a long time, like many weeks, even months. So we would have closed the trade around that time here when the red candlesticks here on May, the famous May 19th, 2021, when there was that big crash on Bitcoin, the trade would have been closed at about $36,000. So now you know the strategy's rules, and let's take a look at the backtest on the daily time frame, 4 hourly, 2 hourly, and also 1 hourly. So as you may know now, the goal of this very channel is to backtest a lot of strategies that are based on indicators and take a look at the performance metrics. And the very goal is to trade in an automated way a portfolio of these strategies. Of course, we chose the best versions of them, because for an exponentially moving average here with a length of 200, we could indeed choose another length, like a 21, a 50 moving average, a period of maybe 100, and so on and so on. So what's the best length? And also we have to make sure that the strategies has a certain number of trades, because for this very example in front of our eyes here, the number of trades is very low. I think it's about, I have counted it, it's about 36 or so over a 7-year backtest period. So it's not a high number of trades. And we want a good amount of trades. Why? Because we want to build a strong conviction in our strategy. It has to have some statistical significance at least. So we aim for several hundreds of trades possibly, and not simply a few dozens. So here's the daily time frame backtest results for the EMA-Price crossover strategy, long only, compound each time. As you can see, the best length so far is about 110, so it would have been the best length over this backtest for the daily time frame, with about, I counted the number of trades, and it's about 36 trades or so over 7 years. So for me, it's not so many trades, and I'd like to have more. That's why I would not trade these strategies with this numerical parameter and time frame. So that's why we are going to study the 4 hourly, the 2 hourly, and the 1 hourly time frames as well. Another thing that I want to talk about very briefly is that a length of 110 is not necessarily the best one in the future price action. This was the best one for this very backtest from 2017 to now, at the time I'm recording this video. But of course, in the future, the performance is not absolutely guaranteed. So we must do further testing to ensure that we are not doing overfitting here. So we have the best performance in the backtest, and if the strategy does not perform well, testing forward or trading forward, it is not a good strategy finally. So we've got to do forward testing, and that's what I do in the premium member area. So now let's take a look at the 4 hourly. Here in blue you can see the results for the EMA-Price crossover strategy, long only. We compound 100% of our investment at each trade. So the first column is the return expressed not as percent but as a multiplier, and the second column is the risk adjusted return under the form of a Sharpe ratio. So with a Sharpe ratio of over 1, this is a usually very good performance. And we have other criteria as well, like the number of trades, the return, etc., etc. So here we could choose a length of, for example, 210, which is not so bad. Of course, we have some snagging here, but it's not absolutely significant. Here, overall, we have a bluer area that is, yes, very large, but if you choose a length within that quite big interval of, let's say, 170 to 270 or so, it's not a bad length for your exponential moving average to choose. You have some signal here, obviously. What I like with the 4-hourly also is the number of trades is increased compared to the daily time frame. Now let's take a look at the 2-hour time frame. So this is still the same strategy. The only variation is the time frame, and of course we have backtested a whole bunch of EMA length from about 2, which is not displayed here because the Sharpe ratios were negative, to 365. So again, look at the rosiest areas. You can look at it in the return column or in the Sharpe ratio column. I find it easier in the return column here. So the best length so far would be something like 250 for the 2-hourly time frame. And also the Sharpe ratio is very good, over 1. So this is a very good strategy in 2 hours as well. And the total amount of trades is even increased compared to the 4-hourly, which was already higher than the daily time frame. So this is the kind of strategy that I like, with a number of trades that is above 100 or more, and with a Sharpe ratio above 1, and other criteria as well that I monitor in the premium member area to select the best strategies to have in a portfolio that we are then trading in a test forward phase. Now the final heat map, the 1-hourly, still the same column, the return on the left and the Sharpe ratio on the right, the length on the very left. So the best length would be around maybe 140, something like that. You don't have to be very accurate when choosing the length. We are just looking for areas that are here more orange than the other ones. So of course it's not perfect. You have some gaps, some snags here and there. So maybe it won't work in forward testing phase. And that's why we have to make a choice anyway and test further. Another period length that would be quite nice is at the bottom with a Sharpe ratio of almost 1. This is the main drawback for the 1-hourly. The Sharpe ratios here are not very good, but the best performance is with a length of about 350. The main problem with that is that 1, the Sharpe ratio is less than 1, and 2, the number of trades won't be as much as I want to, because when the exponential moving average length is big, of course the number of trades will be reduced. So I hope you have some good value from this video. You now know how to choose the period length of your exponential moving average price crossover strategy. So I hope you enjoyed the video. If you liked it, please hit the like button and subscribe to the channel to hear from me backtesting other strategies in the very future. Bye bye.